over to you. Please join back for the next session. I think the psychologists are very effective communicators. To prove that we have got another psychologist who will be taking the next session for us, I request C. Vijay Raja to come to there, and I request Gurraj Raja to check for us.
walking around a little bit. That's how I ensure that my personality is maintained rather than staying in one place. The problem will be for you because if I want to fix the camera on me, I will not be a Statue of Liberty. I will be standing in one place. I may be moving around. You just have to help me on that. So I will explain this to you. Now, the topic that was actually discussed was saying that we discussed the privileges of a private company. But somewhere I felt discussing privileges of a private company will be absolute injustice to the 2013 Act. Why it's an injustice? Because talking about privileges, the privileges I can say copy paste from 1956, except for plus or minus 1 and 2. Only privileges is of no use. We need to know what is in the 2013 Act. As a practitioner or as a consultant, you need to know what is in this Act. And therefore, let me start off by first wishing you all a very happy evening. Let me wish you again a very happy evening, friends. Okay, I can find it because I used to always tell this in the classroom also and also in my office. That is, when you wish a happy evening, I can get a response from anybody except chartered accountants. Why? Because chartered accountants' first reaction is, what's so happy about the evening today? Do you know this Companies Act is not at all understood by us properly? Can you see here? Yeah, we feel like we are children who don't know this 2013 Act. Can you see here? We are feeling shy that I don't know how to respond to the client because I don't know what this Act is all about. I start feeling that actually I am under poverty because of lack of knowledge about this Act. But the fact remains, all the three have one common factor. Whatever is the problems in life, they have a smile on their face. And you need to have a smile on your face all the time. I think the greatest quality of any human should be to give gratitude. To give gratitude. My first gratitude is to the Institute of Chartered Accountants of India for whatever I am today. It's because of the grace of the Institute, and thank you for all my colleagues, my friends who are here, and of course my office, which has always helped me in ensuring that whatever I do, I have the peace for what I'm doing. My office, that is Guru and Jana. Thank you very much. Let me start off with this concept. Of course, there are 5 elements. I call it as the Panchabhutas. What are those Panchabhutas that you should know? Number 1, you have the Act, 470 sections. In fact, I've called it as, or is it 806? Why I've said it as 806? Because the rules, as may be prescribed, 336 times it has been used. Therefore, if I add both of them together, this Act is actually 806 sections. I don't think you can call it as 470 sections. Plus, is it sufficient? No, you need to look at the forms. Some are of course formless, and of course some are out of form. Circulars. You have a lot of circulars. Of course, I'll also discuss some of the circulars already given by MCA. Of course, we'll just be going in circles. Notifications. If you look at this notification, it is actually called as removal of difficulties order. That means first create difficulty and then remove it. Yeah, but we always learn that prevention is better than cure, but unfortunately we'll create a difficulty and we'll create an order saying that removal of difficulty order will be given. Now, I will not call it as privileges. Why it is not no more a privilege of a private company? It used to be a privilege. It's no more of a privilege. Why? Joint family concept. You know, unlike the yesteryears, wherein joint family was a great privilege to stay in. In fact, I'm sure all the elders here will agree with me saying that, oh, you should know the way we lived our childhood in a joint family, all of us together and the way we grew. That is no more true today. Today, joint family is only of fights. Right? In fact, it's always told the industry average is there are 2 fights per week. There's an industry average also for this. And of course, everybody proposes. Why joint family? We are talking about a private company today. 2013 Act has totally confused us. What's a private company? In the definition of private company, you will find OPC. And why OPC is coming there is that OPC also is a private company. Section 3, subsection 1, clause C. So you don't know what is a private company, what is not. But you have a reference saying that it's a joint family now. Proposer, seconder and disposal by same person. The one who proposes, the one who seconds and the one who disposes is all the same people itself, because they've got the rules which will ensure that whenever they want, overnight they can change whatever they want to change. I am the boss and I have permission to say so. In the office, when I tell my client, hey, this is the law, in the very next second, there will be an MCA circular which comes and says, sorry, that is no more the law. So I think I'm the boss, I may not be the boss actually. So, are we talking about a marriage here? I think so, yes. If I compare the 1956 Act and the 2013 Act, I think this is the situation of marriage. Typically, to make you understand private company better, a private company was in love with the 1956 Act. We were in love. Why we were in love? Lot of privileges, lot of benefits, and we had a very good time with each other. I'm talking about a private company and 1956 Act. Both of them had a beautiful love story. Now, what is the proposal? The proposal is, let's get married. Right? We've been together in love, but now let's get married. So there comes the 2013 Act, which says, come, let's get married. Okay, let's get married. What's the big deal? What's the big deal? Let me tell you. This is what it was. 1956 is like this. 2013 would be like this. All the responsibilities, any loans to directors applicable to a private company also. Right? We have 295 provisions which now we reintroduced. 293 provisions which was there in the erstwhile Act. I'm giving you references of 1956 because easy to link. Right? 293 provisions which are not applicable to private company now becomes applicable. Postal ballot also starts becoming applicable once you cross 50. A private company can go beyond 200. I'll come to all those provisions, but just a trailer. But now this is the situation. Is that enough? No. 1956 Act, we had learned the sections, and by chance at least we remembered all the sections. This is that section. At least we can tell our client, I know some section. I need not always refer back. Now what they did, everything is the same. I'm telling you there is no difference between the 1956 Act and 2013 Act. Absolutely no differences. I'll go ahead and tell you how it is. Actually no differences with the minor changes. There was no need to do any of these activities. What they've done is, the base of the law is the same. Base has not changed. Then what have they changed? It is like this. 1956, it was like this. 2013, it is like this. Person remains the same. You change the section here, you change the dress here, and you change something else. You can clap loudly also. I'll also be happy about it. Oh, thank you very much. Right? Thank you. Thank you. And that is what they have done currently now. And you say that, okay, new section, new provisions. Let me just give you a macro level understanding. 17 new sections. 17 new sections wherein no provision exists in 1956 Act. Wow. 17 new sections have come into picture. Nonsense. 50% relate to sick companies and winding up companies. I am neither sick, nor do I have any plans of winding up. 30% are notifications covered into the MCA had already given enough of notifications about electronic mode, about video conferencing. MCA has already specified all that. That you're only converting into an Act by putting it into the 2013 Act. No big deal. Only 20% are new. You talk about CSR, yeah, it's a new provision. These are very few that you could have as well introduced in the 1956 Act. I said, what was the need for you to change everything? I'm asking you. We're going through a seminar for so many days, and we're calling it as a workshop. Ultimately, if I ask you to think back and tell me, what is the big change you found between the 1956 Act and 2013 Act, except remembering new sections? Yeah? Penalties. That's why it is called as a workshop. We will work, and the MCA can go for shopping with all the money they get, right? So, right? Now, why the new Act and why the change? Why the new Act, why the change? Let's not be afraid of this. It is always said the key to change is letting go of fear. We have a fear. Something new comes into picture. Oh, I need to learn again. Oh, I need to look at it again. And then let's not have that fear. It's okay. Anything, change happens. In Kannada, we used to say, Jana change keltare. So the Kannada statement, Jana change keltare, Jana change keltare. Of course, in English, I have a better statement to say. That is, what does not change does not grow. And what does not grow dies. And that applies to all of us also. If we don't change, we can't grow. And if we don't grow, then our enthusiasm, our love for the subject and our knowledge will also die with us. It's okay. If it is changed, that's good for us. Let me first talk about some transition provisions for you. 12th, there was a sudden dhamaka, right, wherein they said that suddenly the new Act comes into force. I wanted to just tell you some of the clarification which has come. You remember the Panchabhutas I told you? One of them was about the clarifications. Here is one of them, which was issued on 13th September itself. You know the 12th was the applicable date for 98 sections, and 13th you have this notification which says, subsection 68 of section 2. Basically, when you're talking about registration of a private company, many of them would have filed their MOA and AOA by putting 313 provisions of 1956, whereas your incorporation would have happened after 12th, wherein you're supposed to call it as a 2013 law. So you're born under the new provision, but you're filed under the old provision. Is that okay? The answer is yes, it's okay, because they said it's okay. Here is the notification. It said even though it was under the old provision, it shall go ahead and register the same. Section 102, issuing notices of general meeting. You would have already issued the notice for a general meeting. Later on, this notification comes saying that these sections are effective. Now your notice becomes an invalid notice because you have not followed the provisions of 102. Now it's okay. Here is the notification which says, as long as you have ensured that if the notices of general meeting honor after 12/9, if you issue the notice after 12/9, then yes, you have to comply with 102. But if your notice was issued before 12/9, but the meeting was held after 12/9, nothing is going to happen. I'm telling you all these provisions because you never know. Suddenly some junior officer somewhere will issue one notice. We used to always call it as a love letter. They'll send one love letter saying that, we call it as love letter because I know for income tax you're all very much aware. Which section deals with scrutiny notice under Income Tax Act? 143. Why is it called 143? Because I love you. Right? It's 143. And inclusive notice. What is the wordings of the notice? Come and meet me tomorrow 11:30. Is what the officer says. So we used to get these love letters. TK. Now this problem, if it comes, you need to refer to the circular saying that this provision will not apply. You had section 133 saying that till the accounting standards, right, are getting notified under the new NAFRA rules and all that, until then you can stick to the accounting standards of ICI itself. Then you got section 180, wherein it talks about, look at this provisions here. Some of your provisions from ordinary resolution has got shifted to special resolution. Now you already issued a notice saying that you have to pass an ordinary resolution under 1956. Whereas on 2013 it has become a special resolution. Notice has already gone out of your hand. Now it's beyond your control to change it anymore. That notice still continues to be a valid notice. No need not worry about that provision. Then come to another notification. This is on 18th September, wherein they say that it ceased to have effect from that date. This is something I want you to understand. These 98 sections which have now become effective, can I still look at the dual legislation applying? There is no dual legislation. To the extent of 98 sections, the 1956 Act will not apply. So therefore, for these provisions, you can't say I will go by harmonious construction and the interpretation of statutes. This concept does not work for us because it says they will cease to have any effect, these 98 sections. So this point will continue even as and when new sections gets notified, because I never know. By the time I end my session, by the time you go out, one more dhamaka would have come out saying that some more sections have been notified. Now that Sachin has already gone out. Yeah. Then come to one more here. MCA notification for removal of difficulties. I told you they'll create difficulties and then remove it also. Now if you look at, of course it's based on section 470 power. We have the concept of tribunal everywhere. But you know the tribunal is not yet in force. And therefore it says that until tribunal comes into force, you can continue with CLB itself. So this is another removal of difficulties notification which says you can go with CLB itself. This is something for you all. All those people who are into software programming or your clients are into software programming, be very good friends with them. Why? Because every company must have a website. Now you need to have a good website with yourself. Why you need to have a website? I've given you some of the sections where website is a requirement. Where are those provisions where website is a requirement? I've just captured all of them together and given you in one place, just to tell you where all you need a website. Where all do you need a website? One is section 12, wherein you have to give the addresses of your website. If you have a website of a company, then that should be mentioned in every of your letterheads. I like this word billheads. What a beautiful provision. They've used the word billheads. Till now I had never heard, right, the word billheads. For the first time I had to scratch my head to understand what is this billhead. I'll refer to billhead later, just hold on to that. But of course you have to be aware that this is your website address. Then you want section 13A, read with rule 229, 2.29. The beauty of the rules is, you all know it, but still I'm just telling for the sake of saying it. Rule 2, when you say rule 8, rule 9, it talks about the respective chapters. So that is one good thing, so that our memory power is reduced to that extent, or rather not used to that extent, by telling that if I say rule number 8, it means chapter number 8. So in chapter number 8, you're talking about point 3 coming into picture. So you got section 13.8, which 13 bracket 8, which says special resolution to change its objects for which it has raised the money through prospectus. Details of the special resolution should be mentioned in the website. What is this? You have issued a prospectus, you're asking for money, you got a purpose. Now, you got excess money and you're not going to use that money for that purpose for which it was taken from a shareholder. What can you do with that money? You can use it for some other activity with the permission of special resolution. And for that, you have to put it in a website saying that this is what you're planning to make a change from what you have taken. You've got 124 talking about unpaid dividends, which my partner, Sri Lakshmi, my student, very proud day for me because I have my student who presented today, and it feels nice. A Dronacharya always feels nice if the Arjuna can overtake the Dronacharya. So it's a good feeling always. And then you've got section 135.4. I hope you understand that unpaid dividends. Now you have to publish the entire unpaid dividends details through the website itself, saying that what are all the amounts, what are the bank accounts, who is the person for whom the unpaid dividends is lying, through the website. Then you've got 135.4, red with 9.11, which contains CSR policy. Oh, you have to mention in your company what is the CSR policy of the company and how are you going to go ahead with the details of the CSR policy through your website. 136.1, that is the financial statements of listed companies, including consolidated financial statements, must be put up in your website. You already have the ROC the moment when you file, they become public documents, which is an existing law, which is the same law in future also. Apart from that, you should also put it in your website also. That means you need to have enough website space, if you can understand what I'm saying about it. So you need to have that much of space to ensure that yes, that will also be taken care. Then section 177, audit committee. Through the audit committee, one of the subsections there talks about vigilant mechanism for directors and employees to report genuine concerns. Now this also has to be reported. That is, you should provide the policy, the vigilant mechanism policy as to, you can be a whistleblower and you can come to me and let me know what is the situations, and that procedure has been put up saying that the policy must be laid in the website itself. And code of conduct of independent directors, the terms and conditions of appointment of independent director must be also put up in the website. I should know that under what terms and conditions you appointed an independent director, so the website must tell me what they are all. So these are some of those places where website is a must. I hope you can understand that, just to make you in all in a nutshell, like what Gururaj Acharya was telling me, saying that, was telling all of us, that I'm not discussing any one single chapter. I'm discussing the entire provisions of law, and therefore I'm trying to summarize in one place. Secretarial standards. Till now they were recommendatory in nature. No more recommendatory in nature. Going like this, there will be I was just thinking, if everything continues like this only, you have accounting standards. You've got the auditing standards, now standards on auditing. You've got those who know about what is called as CSR standards are also there, if you're aware. You've got the GRI, those global reporting initiative. You know that there's something called as the CRT table. A lot of these provisions again are based on environmental standards are there, accounting standards are there, auditing standards are there, secretarial standards are there. Income tax is planning to come out with income tax standards. We're going to have that also very soon. Cost accounting department also says we're also going to have our costing standards. If everybody continues like this, just a matter of time, I think our next generation children will not start with first standard, second standard. They'll say the first standard is accounting standard, second is called secretarial standard, those first standard, second standard will go next, accounting standards will come into picture. Now you've got secretarial standards, you have to follow secretarial standards. Where does it say? Section 118, bracket 10, which says every company shall observe secretarial standards with respect to what? With respect to general and board meetings. Therefore, to the extent of secretarial standards dealing with general meetings and board meetings, you have to follow secretarial standards. So indirectly now secretarial standards becomes mandatory in the form of SS1, SS2, which both deals with board meetings and general meetings. Now you need to follow SS1 and SS2 also. I hope you understand that I'm talking about all this from the day it becomes effective. So the secretarial standards also becomes part of our requirements. Provisions vis-a-vis articles of association. What do I mean by this? You know, most of the places we used to mention this, or rather the Act used to mention 1956. This is what you should take care in the section, unless otherwise provided in the articles. That means you have the option to put something else in the articles, which may not be on par with what is given in the 1956 Act. And this is where is my answer to you, saying that these are the provisions where you can say otherwise. So what are those provisions where you can go otherwise? Number one, you've got section 50. If the articles authorize, then the company can accept unpaid share capital, although not called up. This is like your advance on calls in advance. Section 51, payment of dividends in proportion to amount paid up on each share can be made if the articles authorize. That means normally dividends is given on the face value of the share. If you want, you can go by paid up value also. That is, of course, it's not new provisions. We already had this in the 1956 Act. I'm just trying to put it in one place. Section 62, of course, some of them are new. Restriction to renounce the shares offered to the existing shareholders. A very important point. Section 62, I'll go in detail, especially for a private company. Private company 62 also is applicable. What is this all about? Right shares was a concept which was a prerogative of a public company. Now it has become part of a private company also. I told you additional responsibilities for a private company. Because of this provision, you know under section 81 we had 3 rights to an existing shareholder. Right to accept, right to reject, right to renounce. And I'm talking about the third one, the right to renounce. If I don't want to take those shares, I can renounce it in favor of somebody else and it's my right. That means if I decide to renounce it in favor of Y, then you better allot those shares to Y was under the provision under the public company. This percolates into a private company now. A private company also must give offer to the existing shareholders and they can also go for a right to renounce. Dangerous point. If you don't want the existing shareholder, for example, I am offering shares to A. And now A has got a right to accept or otherwise renounce it. So A says, I don't want it, I want to give it to C. But I don't want C to become a member of my company. Then you please ensure in your articles of association, put this clause, section 62, telling that I restrict the right to renounce shares. And therefore a private company can escape from right to renouncement. Which means, in a nutshell, if I put this in my articles of association, I can ensure that if I offer shares to A alone can accept. He cannot have a right to renounce it in favor of B, which is a good provision because as a private company, I need to hold that confidentiality and interact activities. Next, 103. Quorum can be more than 2 members. I don't have an option to reduce the quorum, but I have an option to increase the quorum. That provision can be put in the article saying that I want the quorum to be much more than what the Act prescribes. Section 152, appointment of first directors, which we all know it, that if I don't appoint the first directors through at the time of incorporation of my company, then the subscriber shall be deemed. And therefore it's good to put the first directors in my articles itself. 164, provide for any disqualification for appointment as a director. You know this point again is for a private company, wherein I can add extra disqualifications as to who is not qualified. You can always say that only if his height is 6 feet and his waist is 32, I'm talking about myself, only then he shall be appointed, else he should not be appointed. You can put any qualification, disqualification. The 164, allowed for a private company, you can add through your articles of association. I heard one of the questions where our ex-chairman Babu also was asking, saying that if there is a situation of section 170 of the erstwhile Act, whether we have a similar provision under the new Act. Similar provision in the new Act does not exceed. What do I mean by 170 of the erstwhile Act? It talked about situation wherein when it comes to proxy, when it comes to short-term notice, I had an option through my articles of association that those provisions as generally applicable will not apply to a private company. That benefit was there. That benefit has been removed now. Therefore, I don't have any such option, nor the respective section does not give me any right. The respective does not give me any right saying that unless otherwise provided by articles. So if you want to go for a short-term notice to come to a bullseye on the question what you have asked, can I go for a short-term notice? Answer is yes, short-term notice possible, but not through articles, but only by asking for a consent of 95% of the directors. That's the only way you can go for a short-term notice. Then small companies. I'll just quickly run through small companies because it's too small for me to discuss. Why? They referred only in 5 sections. Only 5 sections. We are making a big hue and cry about small company, small company. Kya small company? Entire 470 sections of the Act discuss only in 5 places what's a small company. And for these 5 places you created one company called small company. I think it was a waste. 5 places only. What are those 5 places? Number 1, definition is 1 place, over. Second, 2/40, not required to prepare your cash flow statements is not required for a small company. Then section 92, annual return signed by, which has already been spoken by Ravi about the fact that it can be CS or in his absence by the director himself. Section 173, 2 board meetings in calendar year, again gap not less than 90 days, again was spoken on. Then 233, merger process between 2 small companies will be approved on the fast track scheme. 2 small companies coming together will get approved in the fast track, 2 Panbida fellows coming together. Can be on the fast track scheme. So small companies, only 5 places we have referred, and we are making a big hue and cry, oh small company also is there. No, it's too small for us, let's ignore this. It's only 5 places, right? So it's easy for you to understand that it's only in these places you talk about small company, else don't talk about small company at all. Having said all this, now let me come to what I wanted to discuss the most. I am talking about a private company, where it affects you in case of a private company, or rather shall I say where it affects us when dealing with our clients for a private company. I have done this entire presentation now in chapter form. Every chapter I am going to take a few sections which affects a private company and discuss about those sections, and that becomes easier for you also because it's in chapter form rather than mixing it up here and there. I have taken each chapter and discussed. It's not going to be exhaustive because I will have to discuss all 470 sections. At least my my partner at least said that until I complete my section you will not get your snack. Now if I say all 470 I am going to deal class by class like how we do in income tax. If I do class by class, forget about going home. Anyway, tomorrow morning only is the session. You can stay back and celebrate Shivratri now only. So that will be the situation. So I'll take only some important issues and take it from there. Let me start with preliminary. Your 313 definition, you've got 268. I'm just giving, this will be the flow in which I'm giving it to you. So that it's easy for you to understand what I'm discussing. Henceforth, all my slides will be in the same format. I'm talking about 1956 Act, 2013 Act, and what's the impact based on the difference between these two. So it becomes very easy for you to appreciate what I'm saying. 1956, it was called 313, which we all knew. 2013, you have to call it as 268. Applicable with effect from 12th September 2013 itself. That means the provision already in force. And of course, because 268 uses the word securities, you can go to definition of securities in 281, which is of course based on SCRA. Securities Contract Regulation Act. 284 defines the word shares, similar to what we had the definition of shares under section 2 bracket 46 of 1956 Act itself. No difference. Impact. The maximum number of members increased to 200. From 50, we went to 200. Oh. Why from 250 you made it 200? Only understanding I have is Indian population is growing faster than number of companies. You can't have that many more companies. Therefore, in one company only have more people. So the population is taken care by statistics. No, don't put this on record. I'm simply telling this. Saying that is why 200 has come into picture types. Okay. OPC is also a company, is also a private company. This is given under 31C. 31C says that OPC should also be deemed to be a private company subject to its own notwithstanding rules. Then section 73 which talks about deposits. The difference between 313 and 268 was in 313 we had the fourth limb which says that prohibits acceptance of deposits from persons other than members, directors and their relatives. That clause has been removed under 268. Why? Because section 73 itself now says that you can't anyway take public deposits anymore. Any deposit to be taken shall be only through its members, and therefore the requirement of telling that you can't take it from anybody else is no more relevant. It is anyway covered under section 73 itself. I hope I'm clear on this point. Then comes in chapter 2, that is incorporation. In incorporation, what should I know? One is OPC. I will not take too much time on OPC because it has already been discussed yesterday also. Now let's talk about OPC was not a concept in 1956 Act. It was not applicable. 2013, of course, you got section 2 subsection 62 read with 31C which I have already discussed, and also rule 2. Some impact points. OPC is also a private company. Only natural person, Indian citizen and resident in India. Why they create these complications, I don't understand. If you look at the international laws anywhere else, either a C Corp or an S Corp in US, even a corporate can also be a OPC. See, there are so many subsidiary companies wherein, if you look at the entire history of the legislation, why OPC first came, going back to the J.J. Irani committee report, because it started from the J.J. Irani committee report. I still remember that very well. Why? Because 2-3 years back, I went ahead across India to give some corporate training programs on the New Companies Act. I'm talking about 2-3 years back. I went to all the states, I went to all the places across India, gave talk on the New Companies Act to all the corporates. And when I spoke to the corporates with full style, I told them, do you know that the New Companies Act is coming? Are you ready for it? Are you ready for it? I challenged everybody, are you ready? Start studying. Then it didn't come only. Next year they told me, can you please take the session again? I said, I will not come. Because next time when I go, the same audience will be sitting. He'll get up and say, you only told, are you ready? Are you ready? Where it never came at all. This time I remember, CA Institute asked me this question 2 months, 3 months back. It was, I think, in August. They asked me this question, sir, can you take the session on Companies Act? I said, I will not take. They said, why you say I will not take? I never know whether it will stay or it will not stay. Because now suddenly they put one bomb in 12th of September, I know it has come. Otherwise there was no guarantee. Just wait for some more months. Elections will come. If the government changes, everything will change. For all you know, what I am discussing also, if a new government comes, they may say, I don't like what the old government did. Remove everything, let's go back to 1956. For removal of doubts, I can create one more and put it. No, I'm just guessing. Okay, it will not happen, I'm just saying. So if you look at J.J. Irani committee report, it said the whole concept of a private company has been forced. What does it mean? If you see, most of the private companies which are being formed today are dignified proprietary concerns. Meaning what? Either husband and wife are there. Of course, in which case wife is always the superior. Let's come back to this now. So when you have two entities, you know one person will hold only one share. Naam ka vasta. And the rest of the shares will be held by either the holding company or whatsoever, or in case of beneficial interest, or one person is holding one more share, or it's a closed group entity. They said, you are actually defeating the provision of a private company. We said we want two people, but we know here actually one person is running the entire show, and another person literally has only one share. Then you rather create it as a one-man company. You can as well create a one-person company. That was the whole concept why OPC came into picture. Now you have a condition saying it should only be a natural person, Indian citizen and resident in India. So you mean to say now the whole purpose is defeated. Now corporates cannot run a OPC anymore. So it has to be a natural person, Indian citizen and resident in India. This resident in India definition also, I don't know why they have to misuse or abuse the definition here. Now when you talk about resident in India, just for your clarification or rather academic interest, tomorrow it may become a matter of case. What? If you look at the correct wordings of Rule 2, If you want, you can have a look at the rule 2. If you read rule 2, it says, you should be a resident of India to start an OPC. If you want to incorporate it as an OPC and to nominate one more person, and the other person also should be a resident. Nowhere it says to continue an OPC you should be a resident. Oh. That means at the time of starting I will be a resident, and after that, Jai. Yeah, stay only for such point at 182 days I will stay. Because you read this, I am only go by verbatim reading. The first golden rule of interpretation of statutes, that is called as your verbatim construction, which is called litera legis. If you look at that, it says only at the time of incorporation you should be a resident. It does not use the word that to continue should be a resident. Just to add one more point to substantiate what I am saying is right or wrong. It may sound, because some of you will look at me, because typical auditors we are all only with a doubt. Oh, if you tell you think it will be like that? No. So let us look at this. If you continue reading the rules, rule 2.2 and onwards, you will find everywhere it says where the OPC, that is a member, one person company which is started by one member, if he ceases as what? Only two circumstances are being given for ceasing. It does not use the word if he ceases to be a resident. No, it says if he is incapacitated to enter into contracts. And Indian Contract Act nowhere talks about resident, non-resident, both are capacitated. It only says if you are incapacitated to enter into contracts, and it also uses the word if he dies. Except for these two cases, it does not say he ceases. Therefore, there is more ground on what I am saying. Nowhere it says if I am not a resident next year, I will cease. Oh, why will I cease? Because nominee comes into picture. Only if I am incapacitated by the contract or if I am dead. So there are only two circumstances given. So I still feel that it can continue. Of course, removal of difficulties, one more notification will come tomorrow. I am just telling as on today, that's how the law says. It only says for incorporation is required. Come to objects clause. 1956 had 3 objects, and you know you could have put anything in the other objects. Now you got only 2 categories, objects to be pursued on incorporation and matters necessary for furtherance of objects. Other objects dispense with. Before we used to put P2P not allowed now. That means pin to another P, you can decide whatever you want. Right? Pin to plane is what we generally say, but depending on the virus attack of the mind, you can fill up this P. Reservation of name. 60 days plus 30 additional days was there. Now 60 days only. You don't have the extra 30 days if I am right. Oh, no, 60 days only, fine. Now that if you look at the act I am telling. Now by MCA regulation only it said it was not allowed later. In fact, when I came on to the stage, good you reminded me, when I came on to the stage, I was singing one prayer. I was singing one prayer saying, Prabhuji Kripa Karo. Why Prabhuji Kripa Karo? Because there are 2 Prabhus I'm scared of here in this place. One is Allama Prabhu who is going to ask me questions, and another one is Niranjan Prabhu also can ask me questions. So these 2 Prabhus will be careful. Therefore, I was praying saying that Prabhuji Kripa Karo. So just for the 2 of you, so please, because I may be a teacher for all these years, but I am also learning this act first time. Like all you are, I am also learning also for the first time along with all of you. Let's come back to this now. We're talking about this, of course, one of the few provisions which are favorable to CA. Why favorable to CA? Forget about any time limits, further extensions and all that. Once you decide, you open a company right now. Commencement of business. CCOB concept we used to call it as Certificate of Commencement of Business 149 was applicable only to a public company. Now even a private company, they will not ask for a certificate of commencement of business, but it is similar to asking for a certificate. What does it mean? Here, you have to give a declaration within 180 days regarding payment for share, subscribe and verification of registered office. Those of you can, if you can look at the provisions of the Act, it says you need not decide on the registered office on the date of incorporation of a company. You can decide on the registered office 15 days after incorporation and intimate the ROC within 30 days. Therefore, what is the practical advantage for me? I need not enter into a rental agreement in the name of a promoter and then again go through the entire process once more for the sake of putting it into the name of the company. I can withhold, have the company incorporated and straight away enter into a contract in the name of company itself is a possibility that is there for us now. Let me go on. I've already discussed this. I think I've discussed this. Sin. Now, of course, it was not available before. Now we've got 12th, which says sin to be printed on every business letter. Billheads, I told you. You need to know what billheads. Billhead is a word which was defined between 1860 to 1940. After that, they discontinued the word billheads. And therefore it is now reinventing the wheel. We have come back to the word billets. I don't know why they've used the word billets. Basically we're talking about invoices to be also used. Of course now it is a sin if you do not put the sin. Right? So it becomes a sin if you don't put a sin. So you need to mention the sin also on all your letters and the invoices and so on. So apart from tin, which we have for the sales tax department, you've got a tin. Now you also have a sin, and of course PIN is always there in the form of PIN code. When you put your address, you've got a tin, you've got a PIN, you've got a, matter of time again, in our offices, all of us in the reception counter will have a telephone directory. Telephone directory not having numbers of everybody else, only our numbers. PAN, TAN, PIN, TIN, SIN, DIN, everything will come now. So you'll have our own telephone directory henceforth. Then come to private placements, already discussed, so I will not go into this again. Of course, offer to be made to not more than 50. That day also sir was asking, saying that, but we have got 200 members, but you're talking about 50, yes, 50 per financial year, and therefore you can go up to 200. Then I'll go on to this chapter which talks about share capital and debentures. We had in the old act, you can issue share certificate either 3 months from allotment, or in case of transfer, 2 months time was there, reduced by 1 month now. That is, it is 2 months or 1 month. Very interesting observation in this point. Have a look at this here. I have given a reference of 56.4 and I have also said read with 11.3, 180 days versus 60 days. What is this? Let me explain this concept of 180 days versus 60 days. Once you have incorporated a company, I have 180 days time for which to ensure the capital becomes paid up. That means I have to bring in cash, right, to make it as a paid up capital. So if it's a 5 lakhs, then I have to ensure that 5 lakhs should come into the company within 180 days. Okay, that is what we understand as far as commencement of business was concerned. Whereas if you see, that was about section 11. But here they are telling that you have to issue a share certificate within 2 months of incorporation for subscribers to memorandum. So that means 60 days. So now the clash is between section 56.4 read with 11.3. 56.4 of course telling me that I have got 60 days time, whereas 11.3 was telling me I have got 180 days time. Linking the two together, when should I bring in my money? Installments. I can do it in installments because share certificate is issued on allotment of shares. So ensure that your share allotment happens. It may be partly paid share. Share certificate is to be issued even if it's a partly paid share. But you've got 180 days time to make it fully paid. Am I clear where I am? I repeat again, I'm only going for harmonious construction, interpretation, 4th rule. What does it say? Reading both the sections together to implement both of them. Number 1, what will I do? 180 days is the rule which says I should bring in the entire capital into my business. But here it says within 2 months, I have to issue share certificate. How do I read them together? I need to ensure that I at least allot. It's already allotted actually speaking because you have said that I subscribe to the shares, which means to the extent of allotment money I should bring in. Then only I can issue the share certificate. Then you talk cash coming into the company, and then you're talking about this 2 months. Or other way of looking at it is, my memorandum itself by subscription is deemed to be an allotment. Therefore, within 2 months I will go ahead and issue share certificate, but I will ensure the money comes in within 180 days. I think I'm clear on this, right? Treat the subscription as allotment, and then you say that I will issue the certificate within 2 months, but I will ensure the money comes in within 180 days. That's how we can look at this. Further issue of capital, most interesting section. Right shares, which we used to popularly call it as, but actually called as further issue of capital. Now I put a plethora of sections here. You got section 62, read with section 247. Again, read with your 17.2 and 17.6. Let me explain what I'm trying to tell you here. I want you to understand this impact, very important. This rule of right shares applies to all companies today. That means even a private company, you have to offer right shares. And that rule of relaxation period of gestation is not there. What do you mean by gestation period? Under the old law, under section 81, we had a provision saying that 2 years or 1 year, as the case may be, right shares provisions don't apply. But that provision is not there anymore. The moment you're talking about existing shareholders and you want to go for further issue of capital, you have to offer it to all the existing shareholders. You need to be really careful with all your PE arrangements, your JV understandings, your angel investors. You need to be very careful about all those issues today. And of course, because I use the word about angel investors and your PE is coming to and JV is coming to picture, I just want to add one more point. Section 5, I have not put it in the slide, so I just wanted to tell you, just remember this. Section 5 of the 2013 Act talks about entrenchment clause. in the Articles of Association. The shareholders agreement was always a matter of debate, right, wherein you've got different contradictory judgments telling that whether a shareholders agreement is valid or a shareholders agreement is not valid, and you've got a lot of judgments telling yes and no. Now you've got section 5, which allows you for what is called as an entrenchment clause, which says you can create a provision in the articles itself telling that without the permission of so and so, if I am having 24% stake and you are having 76% stake, special resolution you can pass going by the act. But now I am telling through an entrenchment clause, even though if I have only 24% stake, I can still ensure that these amendments you cannot do. All the act permits by special resolution. Are you with me? All the act permits for special resolution. In the entrenchment clause, you can add telling that no special resolution, it should be 80% majority, 90% majority, 100% required for these points. So without this permission, that means without a 24% stakeholders permission also, you can't make any changes. Is an entrenchment clause which gives more impact than a shareholders agreement which was outside the act, going by Indian Contract Act alone. Come back to this situation. If you are offering shares to existing shareholders, no special resolution required, no valuation report required. Whereas if you are giving ESOP, special resolution is required, but no valuation report required. I am discussing only from the point of view of the Companies Act. I am not linking with the Income Tax Act yet. Any other person, that means you have a private company and you want to give shares to other than existing shareholders or to other than employees. Then what? Then you have to pass a special resolution, and also valuation report is required. Good for us, because when you talk about registered valuer, we are there as a registered valuer. Good for us, no doubt about it. But now if you look at it, I am now trying to link with the Income Tax Act, section 56(2), read with rule 11UA, which also tells me the valuation methodology in case of shares. We call it as gift tax provisions for a company also now. In those provisions under 11UA, it says you should either go by the book value method, or you have to go by DCF method, is what our Income Tax Act says. FDI policy says, if you are talking about foreign investments coming in, you have to follow DCF method. Our company law says, we are always very generous. We have given in 17.6 rule, 12 methods we have given. Now when you have two methods for the sake of income tax, and you have got one method for FDI, why you want to create 12 methods? Just to show that he has passed in financial management. One valuation paper is there, if I am right. So therefore, just being there. But of course, you have got 12 different methods adding to the confusion. Now 17.6 gives you 12 methods. And of course, registered valuer, if you are a fresh CA, if you are new, fresh chartered accountant in practice, you cannot give a valuation report. You should be a FCA, a fellow chartered accountant with more than 5 years of experience. Because for the sake of valuation registry, that is the registered valuer, a fresh CA cannot give a certificate. It should be an FCA. More than 5 years of in practice experience is required. Not for of course, my partner also is an FCA, so she can give, although she looks young. Am I clear on these points? On right shares? Okay. Let's move on. That's about no public deposits. I've already discussed about these points. I'll not revisit those points again. We already know about you cannot accept deposits from other than persons. I don't want to repeat because it's been discussed, right? And of course, you've got section 76. You can still take deposits from public. Section 76 provision is there. Provided you take the rating agency certification, like your CRISIL rating and so on. You can take those CRISIL rating, and of course, a public company can still go ahead. Public companies can still go ahead and issue to the public by following section 76. So 76 is an exception provision wherein public companies can still take public deposits. You can go through 76, it gives you the points under that. Of course, when we say only member is defined under 255, I will not go into this. And of course, we have a provision under 74, which says repayment of deposits within 1 year if accepted before commencement, and if you don't repay, there is a penalty of 1 crore to 10 crore. Very dangerous provision. We really don't know. Of course, you can go to tribunal. That is the only saving grace you have. Then come to registration of charges. Before we had 30 plus 30 concept. 30 days plus extra 30 days for additional fees. Whereas now we have got 30 plus 270, which our Ravi Prasad also discussed. And of course, beyond 300 days, central government approval required. This is the point. Penalty of 1 lakh to 10 lakhs is not a small amount for registration charges. One car is there. Yes, you bought one nano car company has bought. Yeah, no exemption. Nano car also you have to. Now that is the rules. When you're talking about, okay, not a nano. Nana. Okay. Something else. Let's take an example. I'm just trying to go by the bhavnaam ko samjho. Okay. So going by the bhavnaam ko samjho, right? So going by the intention what I'm trying to tell you, right? If you're talking about a small asset which is there, okay sir, and that small asset, you have not got it registered, 1 lakh penalty. Instead you say, you keep that asset with you only. I don't mind this. I don't want it back also, right? That will be better than telling that you pay penalties for this. Yeah, and of course MCA will be in all smiles with this provision. You need to be ensuring and educating the clients, saying that this is a dangerous provision, they cannot take panga anymore. Of course, 300 days time is there, that we are all aware. You still have 300 days with additional fees, 30 plus 270. AGM, already discussed just now, before the break, so I will not touch upon it. National holiday, you know section 3 of the National Festival Holidays Act talks about 3 national holidays, that is about 26th of January, 15th of August and 2nd of October, that is Gandhi Jayanti. Sundays also AGM can be held, so we can also work on Sundays. So question asked this. Yeah, go ahead. You can take the.
It has to be held between 9. It doesn't have to be held between 9 and 6, sir. So it can commence between 9 and 6, sir. So it can go later.
Now I'll ask Gururas to read out that particular provision. He'll read out for you, so you'll understand it better.
Every AGM shall be called during business hours. That is between 9 a.m. and 6 p.m. on any day, and shall be held either at the registered office of the company.
So call at 5:45
and continue.
No, don't continue. Call at 5:45. At 5:50, announce for food. Everybody will eat. Rest of them will go, and only balance left are there. Conduct the meeting. Fine. Right. It doesn't say it should be concluded within that time. Quorum and adjournment. Discussing about adjournment, you had section 174. Now, before we had the concept saying that if you adjourn the meeting, I'm not talking about automatic adjournments, I'm talking about adjourn sine die. If a meeting has been adjourned sine die, you have to again get 21 days notice. That was the previous law which was there, unless it is an automatic adjournment of same day, same place, same time. Like our TV, Doordarshan, what we used to watch before. Fir milenge, aaji ke din, aaji ke samay, agle hafte, isi channel par. Right? That concept was that next week, same day, same place. Where if it's adjourned sine die to some other day, then you can give only 3 days notice. That is more than sufficient. You don't have to give 21 days notice. Postal ballot, already discussed before the break. When it comes to postal ballot, 192A we had it. Now it is 110, that will rule 7.2, applicable to all companies. Exemption is if the companies are having less than 50 members. A public company, if it has less than 50 members, they also need not worry about postal ballot. Not a problem at all. OPCs, of course, don't have to worry about it anyways. And these are all the provisions which Ravi has already spoken, so I will not read it again. Dividends applies to all companies, and we had a wonderful session before this. Every company has to follow about dividends. Then accounts of companies. Just have some points to tell you. That is about public cannot inspect P&L of a private company was the law before, whereas under the current law, section 137 read with 399. If you look at it, it says general public can inspect all financial statement including P&L. So the impact of this is your P&L now is no more a privacy document. So that means your competitor knows how to understand what is your costings. He can understand as to how you are doing your business. The whole concept was privacy, and the privacy is lost today. So that means I don't know whether I can challenge this under the concept of freedom of trade, wherein my trade also requires certain etiquettes of my trade that you are talking about. Then why do you have an NDA, non-disclosure agreement? The whole concept of NDA gets violated here because you're saying that, okay, you will come to know about my entire costings, the breakup of my expenses, you know what is my profitability, and you know how I'm doing my business. So P&L account also is now subject to public review for everybody, a dangerous point. And that is what, if you see, my partner told me to put this, where he said the only thing which is not known is the food served at the canteen. Yeah, in my office what is happening, other than that you know everything about my company. Of course, if you look at countries like US and UK, private company financials cannot be viewed even today. And we are talking about here creating all this, including director's liability. Director's liability. In September and October, you had the Queensland legislation which was passed. That is the Australian government which has passed the new amendment bill. Director's liability amendment bill was passed in Queensland, telling that all these so much of liabilities on a director is driving away the directors from companies. Better to start proprietary concerns. Venkateshwara Enterprises, proprietor Govinda, best. Yeah, Bhagwan ke naam lo, and if somebody says something, say Govinda. Now that's a possibility. Now you're driving away. So Queensland legislation, just 2 months back I'm talking about, has passed a legislation wherein it has said that directors' liability is too much. You should know this. 3,000 provisions were there, 3,000 sections on liability of directors. All got pruned down to only 2. Only 2 now. Now they've got only 2 liabilities. One is personal liability, other one is deemed liability. And the deemed liability concept is they've defined, these are the provisions which shall be deemed. Else, or otherwise, other than that, on the personal liability. Whereas now we are going into the old ones. I like this slide the most. About audit and auditors, tomorrow. Oh, well, right, so this is the best slide, isn't it? So, right, so you need to, dekhte rahiye, kal. So this is, this is giving the lure. Like how in TV serials, one person will come with a knife, he's about to kill, agle episode mein dekhiye. So, therefore, what happens next? Right? Our Nityananda sir will take care of that. Right? Let's come to this now. Appointment and qualification of directors, some of the important provisions here. Directors, 275, we had limit of 15, whereas on 165 limited to 20, includes private companies in total. So that means maximum number of directorship, 20 including private companies. Directors can be restricted by SR to less than 20. This is something which I want you to understand. You can pass a special resolution and say, hey you director, you want to be a director in my company? Oh, I don't want to be a director anywhere else. I just don't want to be a director anywhere else. Only then I'll ask you to be a director in my company. It's possible. So although I have a limit of 20, the company by special resolution can say, I don't want to be a director anywhere else. That means my personal special resolution becomes more effective, overriding the provisions of 165. 1 year for commencement of the Act is the transition period. That means to ensure that these limits are complied with, 1 year time is given. Of course, it says from the commencement of the Act. Act is already commenced. We know it. Resident Director. Now as far as Resident Director is concerned, before there was nothing like this. Now we've got 149(3) and 5. It is again applicable to all companies. Every company must have a Resident Director. And what do you mean by Resident Director? 182 days in previous calendar year. Just now you told financial year. Just now you told me it is April to March. Now you are going back to calendar year 182. Let me warn you one more point. OPC, resident. OPC should be a resident. There it is not calendar year. There it is financial year. Why? Jana change keltare. So there is a change there. For OPC, 182 days is the same. But there it is not 182 days of the calendar year, there is 182 days of the financial year. Whereas here it is 182 days of the calendar year. So, right? So, within 1 year from the date of notification of the rules, you need to comply with this provision also. So, there's a be careful. Simply don't say resident. From now on, if somebody asks you, are you a resident? You have to ask him, you want me to tell you under section 5 and section 6 of the Income Tax Act? Or you want me to tell you under section 149(3) or 5 of the Companies Act? Or you want me to tell you read with rule number 2 for OPC provisions? As to which one you want me to tell you a resident. So, I'm a resident in different categories. This is called Dashawataram in life. Right? We are talking about one Kamala Hassan now coming up and say, hey, I've got all the other provisions with me here. Right? Okay? Fine. Women Director, the most loud provision of our Guru Raj Acharya. Every time we talk about, women directors, somewhere seems to be very attracted with this action, mind you. Right? Right. So, I've always envied his style every time. Okay, just me add to that. From the time I've seen him from before, from decades, the way he's got the style, his personality, and the way he, walks and the grace he has got, I used to always envy him. So, wow, what style and what, presence he has got. Now I have to tell this, otherwise he'll now tell me, you stop your session right now. Right? But anyways, all said and done, I have a lot of respect for him. Coming to this, proviso to section 149(1) read with rule 11(1). I will not talk about enough of this. You got the provisions. Of course, you have to ensure that woman director is there. You have got different rules telling something else. I don't know, you should only help me out. If I take the rules from different places, MCA has removed the rules. You can try. In MCA website, you go and ask for rules, you will not find. MCA says, I don't know, what are you talking about? There's nothing called rules in MCA website anymore. So where do you search? Google. And some other websites, Company Secretary's website, right, or some other regular websites, from there only you can download the rules today. And when you download the rules, 2 versions are coming. One version telling some rule, another version telling some other rule. Now we don't even know which rule is the correct rule, and we are trying to discuss that. I really don't know which is the correct rule. So here this dichotomy, please be careful. What I'm telling here may not be the rule what you might have seen somewhere else. But please wait for the draft. It's only a draft, so you can't question too much about it. Yeah. So let's come to about meeting of board and its powers. Section 293 was not applicable to private company. We all know about 293, which is the powers of the board of directors, which can be exercised with the prior approval of shareholders in certain cases. Not applicable to private company. Now, applicable to private company also. So what happens because of this? This is applicable right now. That is from 12th September 2013 itself. Special resolution instead of ordinary. So for all these provisions, you can't go for a ordinary. You have to go for special. Those who know about the provisions, where a company decides to sell, lease or otherwise, right, transfer any of its assets, substantial part of the undertaking of a company is decided to be transferred, or giving loans beyond the net worth of the requirements of the Act. It used to be ordinary, now it has become special, fair enough. And the words undertaking and substantially the whole of the undertaking was not defined before. And we always were questioning, what do you mean by substantial part of the undertaking? I don't know what you mean by substantial. Now it is defined. So you can go through 180, you'll get the definition. Of course, it talks about 20% interest there. Loans to directors, very dangerous point again for a private company. Dangerous point for a private company. Why? Now it's applicable to a private company, you can't give loans to directors. So my company cannot become a vehicle for concept of separate legal entity. And you can't use it. Where before I only used to go by Solomon versus Solomon, read with Dinsa Manekji petitioner's case, wherein we used to say that lifting the corporate wheel concept was there, wherein by lifting the corporate wheel I used to say that it's been used as a vehicle to route my funds to supersede the Solomon versus Solomon's case. But now it is not possible. I cannot give loan to directors. So I can't take it in the company and then route it to my directors. Applicable this one, cannot give loans to any director directly or indirectly, including loan represented by book debt. I really don't understand the reason for this. Even book debt is getting covered here. That means, even if I do a genuine ALP transaction, arm's length price, it's an arm's length price, and I'm doing this transaction with one of the directors, and that creates a book debt. And if it creates a book debt, I'm still in trouble, because I'll be hit by Section 185 provisions. So that will be something which is a really... repeat, sir. By book debts? Achha, okay. Now the question is, what do we mean by the word book debts? First question. Anybody can help me, please? What do you mean by the word book debts? Yes, sir? Wow, I like this definition. A debt which is shown in the book. So what is book debt means debt in the book. No, you know what? You're giving me a feeling that I'm in a classroom. Because in a classroom when I ask them, what is income tax? Tax on income. What is sales tax? Tax on sales. What is excise duty? Duty on exercise. Right? So, this is what you should tell me. So, your answers need to be the same way. Yeah. Book debts we understand is a pure business transaction. Through a business transaction, if there is a trading transaction and there's a book debt created because of that, that is credit transaction, sir. When there's a credit transaction that has happened, through a normal business transaction only. It's not a loan. It's a pure business transaction. Because of that, you have a debtor-creditor relationship coming into picture. That debtor-creditor relationship can be construed as loan to director. If the debtor-creditor was between the company and the director. Am I clear, sir? Yes, thank you. What about the... See, we have the transition provisions. We have for the removal of doubts. Right? And you always have the cooling period. And everywhere you've got the cooling period for all these provisions. So you only have to go by the cooling period only. Beyond that, again you're in trouble. When we have not left... Yeah. No, you don't have any specific... Yeah.
No, I think we asked this question to Dr. Ravi, where he very specifically said that since it was taken before the Act came into picture.
Correct.
So whatever is already lying in your books are exempt from...
That is what is one of the versions wherein... Renewal may attract.
Sure.
Dr. Ravi, when this question was posed, opinion given was that it will apply only prospectively and not retrospectively. So we'll have to look at it this way. Loan to directors if I'm giving it now. Right? Currently it says, let me tell you, I don't want to give any opinion. Because it's a matter of few days. Once this becomes effective, you will get a circular. It's already effective, that is, but you will get a circular. You have to wait and see for a circular on this as to what's going to happen on this. Correct. Of course, you can give loan to MD or WTD. So immediately make him a managing director or whole-time director by special resolution. Or is part of the conditions of service extended to all employees. If it's part of employee contract, yes, you can go ahead and give the loan. Because loans to employees perquisite valuations. You can get covered under that, not a problem. This was called as intercorporate loans and investments, 372A. Now it's applicable to even now private companies. There are very important provisions. Applicable to private companies, that is, but 372A said intercorporate loans and investments. Whereas 186 says any loan to any person. So that means it is not talking about intercorporate. It's talking about any loan to any person. It can be a corporate or a non-corporate also. It does not make any difference to us. So if it exceeds 60% on net worth or 100% reserves, then special resolution is required to be obtained. So moral of the story now, whenever you go for this, please ensure you take care of this. And you have got section 186.12, read with rule 12.11, deals with aggregate of loans and investments. This question was raised by somebody, therefore I put this point. Somebody asked me this question saying that if I look at 372A, you had a proviso which said, when it comes to limits of 60% and 100%, it is aggregate. Whereas that proviso has been removed under section 186. It does not use the word aggregate. So can I go ahead and give per transaction? And it cannot be per transaction because the aggregate word has been used in the rules. Rule 12.11 says it is aggregate. So aggregate cannot exceed. Okay. And of course investment not more than 2 layers. You want a question?
Raja, regarding the investment in more than 2 layers, if I have a 6-layer investment, I need to roll it back to the parent company.
Correct.
Then there would be an impact of valuation and consequently taxation also. So even though I am not willing to transfer it, by force I have to transfer it and pay tax even though there is no flow of consideration.
What Guru Prasad is trying to tell us is, we said there is a limit of 2 layers of subsidiaries. Now if I already have existing 4 layers of subsidiaries or 5 layers of subsidiaries, what do I do now? Transition, currently I did not find any transition point. So if you have to roll back, okay, let's take after the transition period also. I don't find any transition, but still. Let's say if it gets rolled back also. By roll back, then that means what? You're talking about one company taking back the shares of the other company, having its own implications again. Appointment of directors. The 263, now 162 is what I'm talking about. I'm not talking about actual appointment of director here. What I'm trying to talk about is 5 directors have to be appointed. Individually, we have to pass resolutions. Can I pass a single resolution to appoint all the 5? Why? Because I am one lazy person. I can't pass 5 resolutions. I don't know what is the logic behind this now. We are saying that first you have to pass one resolution without any dissent by anybody, telling that it's okay to pass one resolution. And then in the next resolution, pass it as all 5 in one resolution. Or alternatively, do cut and paste. Pass one resolution, pass 5 times, change the name of the director. Is the alternative what you have. Otherwise, first pass one resolution without any objection. That you can go for unanimous resolutions with 1 into 5 and then again go for 1 more. I think I'm clear on this. Resignation of a director, no provision was there before. Now, director should resign by written notice to the company. So now you have to give a writing saying that you can resign. Of course, these provisions were there. In Glossop versus Glossop case, we had this concept very old. In the House of Lords itself, it said that you need to give acceptance, right? And therefore, there should be something communicated. Because you're talking about removal concepts also, which says that you have to give an opportunity. If you look at LIC was an escorts case, which was an exception. Coming back to this point here now. Board should record the resignation in the report. Directors give detailed reasons with, this is why I should give details about why I'm resigning. How do you expect me to go and tell the ROC, you know why I'm resigning? These are all the fraud they're doing. Therefore, I'm resigning. You know why I'm resigning? This is the operation and mismanagement what they're doing. That is why I'm resigning. How do you expect me to go and tell? If I tell, nobody else will take me as a director again. Right? Then what do you mean by give reasons? Standard reason you'll put. Due to personal reasons. Due to ill health. Right? Due to, right? Preoccupations. You know the vocabulary better. Right? You have to give reasons though. Now here is a comment which says that RSC should know that the problems of directors, what director's home has got problem, right, in his house, whether he has got diabetes, cholesterol. Of course, now women directors are also there. What all problems they have, that also you should tell. Yeah, I'm just telling. That's what the law says. We have to give reasons. CSR, we already know. Section 135, I will not discuss with this. But it's an interesting case. I wanted to understand this case. Sir, you can throw some light if there is something on this. About CSR. If net worth is so and so, okay. It says 2% of average profits of 3 years we should declare. Correct? Assume a situation. In the last 3 years, I've got 5 crores, 6 crores and 7 crores. Is what is the profits of the last 3 years. Current year, I've got 100 crore loss. So what happens in that case? That means I can only go for the last point of saving grace, which says that you can give reasons for not giving. So I have to put this under the reasons why I'm not giving CSR. That's the only option I have here. Appointment of MD WTD manager was not applicable to private company. Now you got section 196. All these provisions are applicable. 5-year term. That means more resolutions, more forms. Whatever we had for a public company, please follow even for a private company. All those provisions of MD WTD. I hope you know what I mean by WTD. Your whole time MD is not masala dosa. Your managing director, of course, and the manager. Minutes of the meeting, just now discussed by Ravi, but I'll just quickly run through it. Details of minutes with all deliberations. Oh, this you should know this. Now you have to give the dissent also. Now the dissent also has to be recorded as to who has given what dissent, because that will be now applicable because of the liabilities. So if somebody has dissented, you have to record in the minutes even the dissent and who is the director who has dissented. Here, record even the dissent. Of course, this will add to your problems on valuation when there is a DDR, because because of all the dissents that is there, corporate governance gets questioned there. Of course, you have to spend hours in writing the minutes. Your due diligence report. Tomorrow when there is a valuation for a company takeover also, when they go through your minutes, they will say this seems to be a very, a company with lot of, shaky. So therefore, that may be dangerous because it doesn't give a good picture. There is a lot of problems are there in this company. Board meetings, not less than 7 days. For board meeting, not more than 120 days gap. Small companies shall have one meeting every 6 months. Shorter notice requires approval of, this is something which I have not understood. You need to help me out. Was this also discussed? Wherein section 173 says, if you want to go for a shorter notice, it requires approval of independent directors when it comes to board meetings. Section 173 is applicable to all companies. But independent directors are applicable only to public company, not for a private company. I am talking about a private company. A private company which is holding a board meeting and they want to give a shorter notice. Section 173 only says you have to take the approval of independent director. It doesn't, the words are not there. The words are not there, but it should be construed to mean if you have an independent director. So that means I can still go for a shorter notice, which means this provision is not, it's a toothless provision as far as the private company is concerned. Okay.
It's a very good thing from the independent director's point, from the corporate governance point of view, to take the consent of independent directors wherever they are there. Right. I mean, I would put
that is what I also put it here, saying that independent director seems to be like a copy-paste error in the act. So it's only I think that somewhere there was an error in putting this. I think overall, I've just given you a fair view about all the provisions from beginning to end, just to give you a clarity about how these provisions can apply. I hope I've done justice. And I thank you very much for your patient hearing. So if there is anything else you need to ask. Thank you.
I think we can take questions. Yeah. Can you give a caller mic here, please? Caller mic. Mic.
Hello.
I have
so just want to clarify one point. There's unclaimed dividend and unpaid dividend. The disclosure on the website of the company, it is not that only Companies Act 2013 requires that. Indirectly, as per the Companies Act 1956, there's something called as IEPF regulation, Investor Education Protection Fund, and yearly a company has to file a form within 90 days after the AGM called as Form 5 INV. So since last 1 year, the same is required to be disclosed on the website. So you go to any listed company, you will find all those details already existing. So it's not under the new Companies Act, it's already there in the indirectly in the old Companies Act.
Correct, but just to again, that was only for a listed company.
Correct.
That provision was not there for other companies.
Yes.
Now
I'm talking about listed company only.
Correct.
Actually.
Now it becomes applicable even for a private company.
Right.
That is where my privacy laws come into picture.
Yes.
A private company investments, I don't want to tell anybody else.
Yes.
But now that gets
correct. I started with a specific thing as
Oh,
listed.
that's very nice. So, thank you.
In case of allotment of shares,
I have one reservation here. If you're asking me a question, you have to give me the answer also. Because you will only give me the question, but you know the answer.
no, I don't know the answer.
Because
That's
generally I ask you only for the doubts. Right?
If I know the answer, I wouldn't ask you. Okay. You said that as of now for the share capital, if the shares are being allotted to the existing shareholders, then there's no need of a special resolution for a voting. Does it mean that it has to be allotted also in the proportion basis only, or if there are, say, I've got A and B who have got 50-50% shares, and only to B I want to allot it. Only for that also what would that be?
Right. Now in those cases, I understood the question. I'll repeat it for the benefit of everybody else. For once, he's asking me a question for which I can give some answer. Right? Otherwise, his questions will always be overhead for me. One of the questions that being asked is under section 81, basically under old law of 81, that is right shares. Now, when we're talking about the 62 provision, applicable to private company also, I want to offer shares not to all the members of the company, but to only one of the members, let us say. Then whether I can do that. One of the members is treated as with other persons. If we look at the provisions of law, with other persons, that means it goes by special resolution and valuation report.
So that would be required.
Yes, because it says when you're giving it to other members who may also be members.
Okay.
Other persons who may also be members. So that means you have to go back to the old provisions, which says that proportionately to all right shares, then not a problem. But if you select and choose, they come under the category of any other person.
Okay. Because this issue will create a problem now in most of the shareholders' agreement. We would have said that there would be tranches of investment, tranche 1, tranche 2, tranche 3.
Correct.
And then the valuation is agreed upon for all the tranches right at day 1. Only the timing only has been deferred.
Perfect.
So, and that shareholders agreement also now, so now what will happen to those? Because the valuations have been agreed, everything. Should we go ahead and change those shareholders agreement, or what would happen?
The best thing to do is to go for alteration of articles and apply section 5 and go for entrenchment clause there only.
But does it come under entrenchment clause? Because entrenchment clause talks about where it requires a special resolution, then you require an approval. But what about the valuation rules? Because the valuation is all fixed today. 2 years down the line, definitely the valuation is much more. So how do we come out of that?
Currently no answer for that. The point is that if you already entered into investor agreements, and through the investor agreements it's going to come in different tranches, that is in installments, and you already agreed upon the predetermined price at which you're going to allot at a respective point of time. And by the time the next installment comes, the act is already effective. In that case, what do? Then you're allotting shares to only one person. Dangerous provision. That has to be definitely taken up and intimated to the issue.
You're talking about entrenchment, right? Entrenchment?
No. Whether entrenchment can cover these also, if it can cover, then fine. But otherwise, then there would be enough.
It is a very interesting point on entrenchment, I think, which we need to, because it's the first time. In fact, Mr. P.R. Suresh, when he came, he talked about, for the first time, there is a new word which is being introduced called the entrenchment. Let us, for the benefit of this, see where all entrenchment comes. The articles may contain provisions for entrenchment to the effect that specified provisions of the articles may be altered only if conditions or procedures that are more restrictive than those applicable in the case of a special resolutions are met or complied with. So how do we see this? Wherever, I think where you mentioned special resolution is required, you can say that I need a double special resolution. I mean a 100% resolution. In such cases, then the provisions for entrenchment referred to in subsection 3 shall only be made either on formation of a company or by an amendment in the articles agreed to by all the members of the company in the case of a private company, and by a special resolution in the case of a public company. So, I mean that means that the formation, or in the case of a private limited company, all members, or where the articles contain provision for entrenchment, whether made on formation or by amendment, the company shall give notice to the registrar of such provisions in such form and manner as may be prescribed. Yeah. Is that all? Yeah. I think these are the 3 places where it is referred. So for the moment, this is it that we have, unless we have something else in the rules. That is the interpretation I get by whatever 3 that is.
But your question still...
So will that continue to be applicable, or what will happen to that? Because that is a lifeline for all investments.
Agreed. I think you have any other views, sir? Yeah, you have any views?
See, the entrenchment part of it is generally only related to the special resolution. But if you take the board meetings and stuff like that in a shareholders agreement, you can also put restrictions on board meetings and things like that. That is why we integrate that shareholders agreement and convert it to an articles of association, so that at least it is enforceable by the company. So when you talk about that aspect of other items which the investors have got protection, they only get protection on that norm, which has been a tested norm as this now, and I don't think there would be any change in that provision. Entrenchment is only giving a little more strength on what is already done. It is not something new. It was already a norm, it has been given a character today.
No, I think his question was something like this. Suppose I want to say that in the event of any fresh allotment, I would like to allot it only to Guru. Is it possible? I think through the entrenchment route it looks, I think entrenchment is not for such a situation.
No, but
I mean, this is my opinion. I don't know.
I can add one point to that.
Sir.
See, it talks about, it talks about special resolution. When it comes to in your situation, you need a special resolution and valuation report. Special resolution anyway will be required because that can be taken care. It can be passed because it's part of your understanding there. For valuation report, I gave you 12 methods. And there is a provision which says that you can also go for something else. That provision is there. You need to look into that. In the 12 method list, there is also a provision which talks about any other agreement which also can be justified. So that can take care of that. So I am sure there is a exit route in that point. I forgot about that. Now I remember this. In the rules, when you gave you the 12 methods, they also mentioned about the other possibilities.
Private limited, all members. Yeah.
So even if one shareholder doesn't agree for it, whom we have normally taken at the time of incorporation, then this entrenchment clause cannot come into it. It becomes again it becomes
I think that's the spirit. Sir.
So it's not. It should be very choosy about whom we are going to have as shareholders in the starting of the company.
If it is a 30-year-old company, you can't go back in history. I think this is more for that, and that is why they said.
That doesn't say all.
Sorry, good.
It does not say all.
Let's say so.
For a private company, all. Private company.
All the members of the company in the subsection 4.
Okay, that is for a private company, yes.
I think it will take a legal route now. I think so. Shareholders agreement. See, the point is what is there in the articles versus what is there in the agreement. Articles supersede the agreement. I think that's the message. Now, in the meantime, if there is nothing in the article, shareholders agreement would be superior. Sir, your views?
No, not on this.
Yeah.
You see, as far as such clauses were already existing even as on today. In case of various companies wherein foreign investors were there, not only the proportion, but even subsequent allotments also should be in the same proportion, wherein no foreign investors' share gets reduced below 50 or 33, as the case may be. Such clauses were very much there even as on today. And as Guru was mentioning, we used to make the shareholders agreement itself as a part of the articles. That is what.
I think now you have the blessings.
Yes, we have the blessings.
There was earlier a situation whether was it correct or wrong. Now I think they have given a blessing to it, and they have given a very technical term to it.
Yeah.
I mean, called the entrenchment.
I have a small question on this loan represented by debt in the book. Okay, that is what is the definition given.
I'm sorry, I just want to conclude the discussion.
Yeah.
Among all the methods regarding valuation, one of the points I'll just read out for the benefit. In the rules, you have got one of the provisions which says, a registered valuer shall make a valuation based on any other method which it may deem fit to adopt in the circumstances of the case, providing that there is adequate justification for the use of such method. That means, The only problem you had was, because of my trans, I have come out with my own valuations. And it's a pre-existing agreement. You can take shelter under these provisions, right, under the rules, which says that any other method which the value deems fit based on the circumstances of that case, as can be justified, can also be taken. So that will solve the problem actually. That issue is solved.
See, I have a question on this loan represented by book debt. See, it was mentioned like if by chance there is a credit sale, it is considered as a loan represented by book debt. I mean, I would also like to, I mean, I am not gone through those provisions in detail. I would like to get educated. If you see, I think 188, it gives the details on the related party transactions, how it should be done, and what is the, where all board resolutions are required, and where all you require a shareholder's permission. And it also talks of if there is some sort of unjust enrichment in terms of it is done at a, not at an arm's length price, that has to be written, and various other details are there. So that has all transactions which are done in the normal course of business. So if you keep that and also read this section, do you think that wherever credit sales are made and within the normal credit period, the amounts are paid, it cannot be construed as a loan represented by book debt? And also if you take strength of the deemed dividend provisions under the IT law, whatever are the normal transactions are not considered as loans. So kindly throw some light on
this. What Nityananda sir is trying to ask is whether I can apply harmonious construction here by trying to say that you have got other provisions which talks about the fact that it can be at arm's length price and so on. So therefore, can I take shelter under this? Current reading, because even before I can go to harmonious construction, I have to first go for literal construction only. By literalogist, and wherein we also have expressio unis est exclusio ulterius. That is, when there is an express provision one section, it always overrides the general provisions of the other sections. And here, because it's an express provision, I think more than harmonious construction, expressio unis provision will apply. Right? And all the Supreme Courts have held, when there is an express provision of one, you have to go by the express provision. So, and because it's a very specific point, if actually you look at the point, sir, if you have it in the, have you put it here? Yeah, if you look at that, if you see very clearly it says, same as other provisions in the Act, no company shall directly or indirectly advance, including any loan represented by a book debt to any of the directors. No. It says including any loan.
No, it is
represented by
only a
book debt.
loan. It is only a loan.
I will probably add a different view to it.
But one more possibility is because
I
it starts off by save as provision.
No, I would actually go with the, I would.
No, but they have exception.
No,
they
that
have
is one
exception.
thing. No, I would go with, there is a book debt which gets cooched or gets converted to loan.
Correct.
That is the type of thing that they are talking about here. And I wanted to reserve this for tomorrow's discussion. But I think this will not debar. I mean, you can't expect a related party transaction to be on cash. I mean, immediate settlement basis.
Correct.
I think there are other provisions to take care of that. But what he says here is loan, actually the book debts, loan in the nature of book debts. Or the other way, whichever way you want to say. Pure book debts, I think our Schedule 6 also permits, and everything else. Correct. We have to say, I mean, this is again.
No, in fact, your provision is becoming stronger now, sir. What you have said, that because it also starts off by saying save as otherwise provided.
Yeah.
So when you say save as otherwise provided, that means it is not a non-obstante clause.
So I have a view on this book debt.
No, one sec. Absolutely.
Sir,
I think auditors also need to comment it under the 6 points, 6-point program, 227(1)(a) on this issue.
So about the
sir, I have a question.
Where are you?
Sir, I was one of your students who taught me company law.
No, that's supposed to be a qualification or disqualification? Achha, okay.
Thank you for that. Sir, I have a question with regard to the same book debt. Book debt has not been defined under the Act, neither the loan has been defined. So can we not show the loans as an advance, because advance are out of the purview of this Act? And my second question is, whether this book debt includes any of the travel reimbursements or travel advance or IOU vouchers which the director generally takes. So these are the two questions, sir.
So I want to add up some more for this.
Yeah, please go ahead.
The sentences which says that it's a loan represented by a book debt. It means to say that the accounting entry by mistake or by chance to defeat the provisions of the law, if you classify under the book debt, that is also included. It is basically, first it has to be a loan. The loan, instead of showing it as advances, if you classify and show it as a book debt, I think only these provisions only will be applicable, not a regular sale transaction, which is done at an arm's length transaction with any other customer.
Possible, but I slightly have a difference of opinion because the wordings is not loan represented as a book debt. It is loan represented by a book debt.
So that
Yeah,
means
I
to
think we
say
need to do
that
some more on
all
that.
the
We will
book
take it
debts,
as-
all the whatever credit sales is there, it is a loan given to the customer. It has to be treated as a loan given to the customer, and henceforth it should not be classified as a book debt. It has to be classified as a loan for all purposes of the Companies Act.
Transaction ALP with a related party transaction, but still beyond the credit period, then I think it falls under this actually. Yeah.
So the other question is, shall I take up the other question?
Sir, I did not get the answer.
Your question is not answered. I think they have decided it's time.
Sir, the next is...
Yeah, 1 minute. No, we need to. This is still a valid question. His question says that we said loan to directors is not allowed. So let us take a simple example saying that there is a travel reimbursement. So the director has gone on a travel and now that has to be reimbursed. Now until reimbursed, it will stay. Can it be called as a loan? Is a question. No, we are not trying to apply logic here. No, by logic. No. By law we have to see. So by law, what do we say? Because there is no threshold limits provided, nothing has been given. So can we call that as advancement of loan? Is what you are trying to ask, correct?
Yes, sir. Exactly.
And for the travel purposes, you might have given advance.
Or let us assume he has drawn an IOU voucher or something of that sort.
But that's, as we said, we have to go by only the general clauses provisions, saying that it should be advancement of a loan.
Yeah.
Now, if I give you a money for the sake of travel expenses, can I call that as a loan? I have my own reservations on that. I don't think it will come under the category of loan. It may not partake the character of a loan.
Sir, and second question is, can I treat the loan as an advance? Because both of them has not been defined under the Act.
I understood.
Yes.
I think there is some clarity on this. Yes.
About the website.
No. Let's complete this part. Yes, sir. Correct. So not the advances. So what he's trying to tell is, when you use the word loan has a nature wherein it has to be repaid. In your case, when an advance has been given, and if you can say that advance was for so and so purposes, it can't take the nature of a loan. Again, we are only discussing in the air. We are not talking about the provision of law here. We are only going by reasonable construction.
Sir, about the website.
Sorry? Right. You have to go by the spirit of the transaction. That's what it's called as reasonable construction or the Hayden's rule.
Sir, question from Balkan.
Yeah.
Through section 135.
Oh, I heard somebody talking about website.
Yeah. I'm here.
Okay, let's complete that. Yeah.
So through
Otherwise,
section,
I don't want him to jump off from there. That's why. Yeah.
So through section 135, they are trying to put independent director to board. So what would be the role of the independent director? Is it restricted to only CSR? For private limited company, what I'm talking. So if in case a private limited company having at least 5 CR as a profit, so there should be an independent director should be there in the CSR committee. So the CSR committee's role itself is the role for the independent director, or can he participate actively in all other board of meetings?
No, I thought we had a lot of discussion on independent directors, and I think it's a much more bigger role than just.
Definitely, once he is a director, there are two issues here. First of all, whether an independent director is required in a private limited company, to that extent there is a dichotomy in the Act itself. The ROC himself agreed and acknowledged that they will probably work on removing this difficulty, if at all. That's point number one. Point number two, once you appoint a person as a director, you cannot say you are only for this purpose, you are not for this purpose. You will have to invite him for all the board meetings and ask him to participate. At best, you may not involve him in some of the committees. When this is my, view.
So through this section 135, that short notice independent director.
In such a case, definitely he cannot be stopped from coming into the CSR committee itself, because that is the very purpose. But you cannot say you are only for CSR purpose and therefore you cannot come to the main board at all. The main board he has to come, and in other committee meetings he may be deprived of.
Especially if you look at his liabilities.
So this website, we have spoken that where and all website has to be mentioned. Is it necessarily to be in the servers which is situated in Indian territory, or it can be else also?
Sir, your question is a global question. Your question is whether it should be in Amazon. But it can't be in Amazon because it's not in India. Right? So then you are creating a lot of issues about what is what. I think that question will get answered if we go through the TP provisions. It's talking about what do you mean by a PE. Yeah? Now today the recent definition of PE, permanent establishment, talks about when you are having an establishment through electronic transaction also can be a PE. So we have a bigger question talking about whether server location can be considered as a PE. Still a question mark. So we have much larger issue there. Rather than just, we are talking about company in its website. That means when I open the company's website, xyz.com, xyzprivatelimited.com, I should find it.
The data which is supposed to be hosted on the website, like dividends, etc., whatever unpaid, how long it has to be hosted?
Generally it is till 7 years because it gets transferred to IEPF after that.
Okay. The next one is OPC concept.
Sorry?
OPC, one-person company. The basic idea of one-person company is that giving a corporate color to the whatever sole proprietorship, correct? So about the succession, who is going to succeed? It is only nomination they can make it. He is making a nomination. Nomination is one of the way of receiving the charge. He is not the owner. It is a legal issue. Battle will be there. The owner of the person who is holding the company, it is always about the legal heir. It is not the nominee.
I understand what you said. Then you will have to go by Lee versus Lee, Air Farming Company Limited's case. Again, House of Lords decision. Wherein we are talking about once you have formed it as an OPC, you are no more talking about a same entity. You are talking about separate legal entity here. So therefore, even that one person, although he formed it as a company, the moment you say it's formed as a company, then you have to apply Solomon's case. And you say both are independent. So you can't say it is my company anymore. Company is different and I am different. So when you say by succession, the nominee gets it. Yes, because company has its perpetual succession. So it goes in that form. So you can't say this is my assets, I am the owner. You should have, whatever is your ownership, you will take it by way of dividends.
The nominee is only for running the company, not the ownership of the company.
So what do you mean by ownership? I don't understand what is the meaning of the word.
The funds which is bought by him for running the company, as a company, the moment
no,
you said that
the funds what he has bought is not his funds, no, it is shares.
Shares.
So then you have got the provisions of transfer and transmission of shares,
yeah,
which will take care of those provisions.
Okay. The next one is about
gift
the
tax.
reason.
You will have to go to section 56 income tax.
The reason in the resignation, we said that we should not give the reason that so many things. I think that provision is brought because of the fall of the Satyam case. That is, it's a visual blower policy which they are trying to put into the director's responsibility also when they resign. They have to give the reasons.
Sir, entire 2013 Act is Satyam case only. So, just like how our finance minister used to always take the Supreme Court judgments and to override that create amendments in the Finance Act. Now we are talking about Companies Act also trying to say one case is there. But my question is, how many auditors are there giving how many audit reports in this country? How many auditors are giving how many audit reports in this country? How many certificates are we doing? And you mean to say all of them are a Satyam case? I don't think so. Just because there's one black sheep, you can't claim that all of them are black. This is like telling, you're going against the Supreme Court provision, saying that until found guilty, you are innocent. This is the other way around. Until found innocent, you are guilty. And I think it's a very bad provision of trying to amend laws based on one single case that it could happen. I think that's entire concept is Very disheartening.
Sir, good evening. Okay, since the Act has come into force from 12th September 2013 and the other side we have a transitional provision.
29th
August 2013 and the other side we have a transitional provision. Does that mean that I have like 2-year period to set right my financial statements, or do I have to set it right by 31st March 2014?
In what context is this question?
Say if I have a share application money pending allotment and I don't want to allot them, I want to refund that money back. So as per the new Act, I have like 60 days of time to allot my shares within the thing. So I have like, I can make use of these transitional provisions, or I can...
No, for this particular, transition provisions are not blanket transition provisions. We don't have any blanket transition provisions. It is specific transition provisions. Only if the section provides for transition, you can go for transition. Else there is no concept of transition. In that case, you only have to see which is the law applicable on that day. Law applicable on that day.
Sorry, in the sense, the previous Act will still be applicable?
Obviously. Until the new Act comes, that we'll have to go by the existing 1956 Act. One question I had here, any provision regarding conversion of a private limited company to OPC? This is something which every time we have been discussing. In fact, a lot of clients of mine have been asking this question. Look, I am a private limited company, but I want to convert into a OPC. What is the answer for this? Section 18 gives one answer. Section 18 of the Companies Act 2013 says, any class of company can be converted into any other class of company under the Companies Act. So, blanket provision has been given for conversion. One answer. That is section 18. Then you go for rules to understand how to do it. Rules does not specify anything about how to convert a private company into OPC. So, currently the situation is like this. Act, section 18 if you see, sir, in the Act. If you go to section 18, you will find that any class when you convert it into any class, that benefit is there. So, whosoever has asked this question, Act permits. But how to do it, you have to still wait because we still don't have any rules. So, if you ask me only a theoretical academic answer, yes, it is possible. Practically, we have to wait because there is no rules specified on this matter. Correct. So, here is section 18 for you. If you have a look at section 18, a company of any class registered under this Act may convert itself into a company of another class. So, conversions are possible going by the Act. Rules you have to wait because rules has not yet specified the methodology for such conversions.
In that case, then there will be multiple shareholders. Then that shall become only one shareholder.
Buyback you
What
have to
will
do.
happen to all the other shareholders?
That is what. See, this is like asking a question when a public company wants to become a private company and a public company has got 500 people. How does it become a private company? That answers your question. How do you convert a public into private? What do you do when you have to bring it back to less than 50, old law, 200 current law? What you would have done? Same provision you will have to apply for this. I am only telling you because rules have not yet come. Act is permitting is what I am trying to say. Act does not give any proviso saying that it is not possible. It is possible. We have to only ask for the rules for this.
Excuse me, sir. In case of OPC company, the owner can nominate. Okay, once the person dies, what will happen to the legal right of other legal heirs?
I have already answered that question, sir. OPC is not your company. The shares in that company only is your, and therefore for shares you have got the provisions of transfer.
The
and
nomination is for ownership, no?
Administration.
Only administration.
Administration.
So directorship.
So thank you very much. I think any more questions can we take tomorrow? Okay, that is a question which you have asked. I think it takes a legal route. I think we will stop with, I like the section 18 there, which ended there. I am showing it on the screen and I am fascinated by the number 18. Let's stop at that. That's a good number to begin with. In fact, that's a very wonderful thing what he mentioned about how to convert any company to any other company. So there's a good scope in section 18.
Yes.
Okay. We really need to thank Vijay, who gave us not only what we wanted him to give, but he has given us much more than what we wanted. He gave us several amount of take-home points. He gave us action points, which can certainly be taken care of, and in his own unique style. I was told that he has got several fans amongst the students, and now you can be rest assured even amongst chartered accountants. I mean, of course, all your students have become chartered accountants, but even otherwise, the chartered accountants who have passed before you passed have also been roped into your fan club. Okay?
No, I have given more than what I was supposed to give because Institute also gives me more than what I should give. My name is Vijay, the spelled is Vijaya. They've added one extra A also for that. Right? So, they've also given me more than what I wanted. They've given one extra A also for me. Adult certificate. Numerology. You create your
General
unique.
Lalit. Okay. Thank you so much.
Friends, Mr. Raja has done Digvijaya into the New Companies Act and caught all the provisions relating to the private companies, small companies, dormant companies, OPCs, and presented to us successfully, and hence became a true Vijaya Raja. For the job splendidly done, please give me a big round of applause. Sir, on behalf of the Bangalore branch of SIRC of ICAI, we thank you very much for presenting this today's session. I request Allama Prabhu, the secretary of the branch, to present a memento as a token of our love and affection to you.
No questions. That itself is a memento for me.
And as an interim dividend, a royal thanks to Guru Raj Acharya.
Oh yeah.
As a royal thanks to Guru Raj Acharya as an interim dividend. Friends, before concluding today's session, I would like to mention that tomorrow's session is going to start at 9:30 instead of afternoon session. Please be present. Every good things will always come to an end, and our session is not an exception. Let us conclude with these words today's session. Thank you very much. Good night.